Hello everyone, welcome into the channel. My name is Brent with Investing on the Go. Today we're going to be covering the SOFI Investing Challenge Week 27 Tiny Deposits, Real Growth, Full Transparency. We've been tracking this portfolio since May of 2025, just depositing $25 to see how large we can grow this portfolio in this specific time frame. We're trying to get up to $1,000 within the SOFI Investing platform. That way you can kind of test it out, see what I enjoy, what I don't like. And then we're going to go ahead and be chatting about the stock market this week, right? There was a big pullback this week, one of the biggest since April 2025. We saw big names coming down. I have a highlight here kind of in the background, right? Microsoft, Nvidia, Tesla, Apple, Amazon, many companies pull back pretty heavy. We'll chat about that, go in and covering all the indexes, and then we'll dive into our portfolio, seeing our performance for the week and seeing where we are with our update. So if you guys are brand new here to the channel, I would really appreciate if you go down below, hit that subscribe button and hit the thumbs up. Also, if you guys would like to join the free Discord server, it's completely new and building it out. We're getting to kind of put a few things in there every week just to kind of add some information. This week, we kind of saw the market pulling back, filling some of those gaps, those gap ups that we had previously done in the prior weeks. We had a couple weeks ago where the market closed and then would gap up nearly 1%. This is just hovering, recovering some of those gap ups, retesting that 50-day moving average before we see whether we'll move higher or lower. Kind of going into the week performance, right? So week 3rd to the 7th November 2025, we had the worst week since April 2025, where the markets were very red. The S&P 500 lost a whopping 1.63%. The NASDAQ took the hugest blunt there at 3.07, right? Double, almost double with the S&P, double with the Dow Jones fell at 1.22. So very much into the red. On Monday, November 3rd, the markets blasted off to all-time highs. The S&P and the NASDAQ actually closed at all-time highs there, while the Dow Jones was in the red on Monday. Then throughout the rest of the week, we saw gap downs. Tuesday opening, market gap down, and then continue to experience volatility, primarily driven back by the pullback in AI-related stocks. We saw companies such as Nvidia drop 9.59%. They had some recovery on Friday. We saw AMD down 9.93%, Broadcom 6.19%. There's many other companies out there. If you guys are following any AI specific stocks that took a hard hit, drop them down in the comment section below. I saw very many images out there of people sharing their portfolios down thousands of dollars this past week. So I'm hoping that your portfolio did well, right? If you're invested into some of those individual leverage companies, right, those probably took a pretty good hit. But we'll see. The fear meter we saw last week was at a 35. Throughout this week, when the market dipped on Friday, I was taking a look at the fear meter. It was running at around a 17. There was some fear out there, but it did recover out of that low 17, up it closed at a 21 here on Friday when I'm running my video, when I'm putting it all together. So we did drop down a lot, but we'll see how it goes. As I was saying, this week, the S&P 500 actually came down below the 50-day moving average. I'll go ahead and put a screenshot up on the screen now, but the S&P 500 came down on Friday at $661.72. So it dropped down to $661.72, which is below that 50-day moving average of $665. So if it had closed under 50-day moving average, we would have seen potential selling off. We don't know where the bottom would have been potentially at that point. But Friday, we did see some recovery after that midday. We saw the S&P, the NASDAQ put on a 1% or so gain, even more within the NASDAQ there. But closing positive in the day. If we had closed below that 50-day, I think that we would have been in for much more volatility going into this week. But going into this week, we closed above that 50-day. I think we're doing some retracement because a couple weeks ago we had gap ups where the market closed and then gapped up 1% and then built on that like a quarter of a percent and then closed and then would gap up another percent and then kind of trended that day kind of flat. But we had multiple gap ups where after hours the market just kind of popped due to earnings. So right now we're just refilling those gaps, we're retesting the support around that 50-day moving average. And then if everything goes well this week, I saw earnings on Friday, helping the market kind of pop back up and showing, hey, it's not an overvaluation in all companies, right? There's companies out there that are doing well, that have PE ratios at reasonable levels. Drop comments down below if you guys have any specific stocks that you guys are following and investing in at this time. So yeah, that's the weekly performance. I think this week going forward, between the 10th and 14th is going to be an important week to see if we keep and sustain above that 50-day, or if we fall below, or if we just kind of trend around, we come back up, we come back down, we're creating that support level. And I think that's going to be an important thing. Okay, so if you guys are interested in starting your own investing journey and have not yet started, you guys can get started with SOFI. You deposit $25. You're going to get a $25 bonus. I got a subscriber on another channel. That's hilarious. You get a $25 bonus for depositing $25. Then if you start up with Public right now, Public has a promo where you deposit. Getting $100 for signing up for Public is awesome. There's other platforms out there such as Moomoo, Robinhood that are also offering, benefits for signing up. So sometimes it's worth just signing up for the platform, checking it out. If you don't enjoy it, hey, no big sweat. You can just move the money out and move it into another account, right? So it's always good to check out different platforms. So yeah, you could also get your free investment tracker down below. I have a free investment tracker, which I'll showcase here towards the end. And also there's a free zero budget spreadsheet that's available to access via Google Spreadsheets. And it basically gives every single dollar a purpose. So whether it is sitting in your bank account, not invested, or it needs to be paid towards that, right? You have 500 extra dollars. What can you apply this towards? So it makes it nice for that. Okay, week 27 progress update. Our base investment, we deposited $25 this week, so our base deposit moved up by 25 bucks to $784.43. Our previous week balance with all total investments was at $828.60. Even with our $25 deposit, right? $828 plus $25 would put us $853-ish. We actually fell down, right? So we closed this week at our current balance at $841.10. That is because our portfolio took a slip up of 1.64%. So while the market did pull back here, where is it? 1.63. Our portfolio actually pulled back as well, 1.63. 1.64% is what's showing here, but that's because on Monday we bought at all-time highs. The week change as far as dollar amount goes, we lost $13.95. So this is not the biggest hit to our weekly change. There was a prior week where we lost around $17, $18. Our total return within this portfolio was 7%, and our total change is $56.67. Now, I've had some comments out there saying change is kind of low since we've been investing in May. The stock market has blasted off nearly 15% year to date. But again, when you're dollar cost averaging into a portfolio, you don't get all those returns that you would with a huge chunk up front, right? If you chunked $5,000 into this portfolio at the beginning of the year to date, you would be up with the market. But because we're dollar cost averaging at higher highs, at some lows, but you're consistently dollar cost averaging at high after high after high after high, you don't get the total returns that the market would give you when you're dollar cost averaging. As your portfolio gets to a larger amount, the capital return, the capital appreciation, and dividends that's going to be reinvested will have a much bigger impact. But right now, our dollar cost averaging is it's kind of diluting our return just because our portfolio is so small within this account. If our account was, say, $100,000, we would see a much greater rate of return while we're making these tiny little $25 deposits because our portfolio would be much larger and we'd be moving much more with the market versus it's tiny and doesn't move as much with the market and only moves when we're really kind of just depositing capital into it. Our new shares that we purchased this past week is 0.03965. This is one of the least amount of shares that we've ever purchased within this portfolio, but this just goes to show that $25 goes a long way. It's buying fractional shares. Back in the past, remember years ago, we could not buy fractional shares. You could not buy into the stock market with $25 because it costs you $25 just to make that trade, right? If you guys were on E-Trade or Merrill, Fidelity, they cost an arm and a leg just to actually buy the stock. That wasn't even including the share price. It costs a lot just to buy. So now we're able to buy $25 and get fractional shares, which is awesome. So we now own 1.36057 shares. We're about 36% towards our goal, number 2, of acquiring 2 full shares of VU within this portfolio. So that is our week 27 progress update. We're at $841.10 of our $1,000 goal. We're 84.11% of the way there. Now, these next weeks are up to be volatile. I expect us to be retesting this area. We're either going to kind of trend above that 50-day, pop back up and hit that ceiling. I don't know specifically where the resistance level will be at. I haven't looked at that specifically. But I think we're going to be in for a wiggle room. If we do break below that 665 line on the SPY, we could fall down to, I believe, 640. I made a video on putting some put options. So check that video out if you guys are interested in seeing how put options work. I made a whole video going over 5 signs you should be hedging your portfolio, especially if you have a large amount of equity tied up within an individual stock or even into ETFs, right? If you have thousands of dollars in ETFs, you may not want to lose thousands of dollars per day. So you write a put option, you buy a put option contract, and if the market falls down, you do make money and you can sell that put option and generate some cash, which you can use to buy at those dips to help alleviate the pain from the red. So definitely check out the video from earlier this past week. I'll have a pinned comment up in the top if you guys would like to check that out. So that is going to be it for today's video. I really do appreciate everyone tuning in and hanging out with me. If you guys like, go down below, subscribe, hit the thumbs up, and again, join the Discord server. It's completely free to you guys and can come in, join, talk about some stocks, investing, dividends, and all of that fun stuff. So that is it from me. Thank you all for tuning in. I will catch you guys in the next one. Bye-bye.